Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Since the surprise rate hike from the Reserve Bank of Australia, along with the RBA Governor Lowe's hawkish message hinting at the possibility of more rate hikes in the future, the Australian dollar's bullish sentiment has eased after the whipsaw price action on Wednesday has seen the market retreat from that key level of 66.8085 and also seen as a 60-day moving average. Along with that, the dollar index, which measures the greenback strength against a basket of six major currencies, remains steady at its 2-month high around 104. Looking ahead, investors are now preparing for the US Federal Reserve's interest rate decision on June the 14th and the outcome, with many investors and also market traders or participants widely expecting the Fed may keep rates on the hold. However, this all comes back to the CPI or the Consumer Price Report, which is seen for release on 13th of June, a day before the rate decision, which could impact the actual view of seeing a rate hike instead of a pause. Along with that, many people were expecting the Bank of Canada to put rates on hold this month, but also hiked 25 base points, somewhat a surprise, along with the RBA's rate hike on Tuesday. If the market has seen a rejection from this level of 66.8085 or the 60-day moving average, then the view is as the market sees the RSI buckle, could pull back towards 66.40 and with a support level likely to show some demand around 65.70. Conversely, a clearance of the 60-day moving average would reopen the top side further towards 67.40 and reassess. It was another whipsaw price action for euro. Along with that, the MACD and the RSI has improved to sort of somewhat strengthening bullish potential. In light of that, let's still keep an eye on the top side, which is around 107.35 to 80.85. As we can see that the long-legged doji from overnight is giving a little bit of indecisiveness in terms of the direction. I feel overall that the dollar index can rally on towards 105, 106 and therefore put further pressure on the downside for the euro and eventually see the challenge around 105, 80, 85 where I've outlined here and reassess. The dollar yen outlook, well, as you can see, the market's recovered further and now pushing on towards 140 and with 141 to 142 broader outlook still remaining in focus. I like the way the technicals are firming up and therefore should keep the bullish sentiment going and any pullback likely to be shallow. As we view the outlook for sterling, the markets again rejected that top side challenge and just keeping that 124.60 level intact. However, the market's still not backing away, and since the recent mixed inflation data could still see a further upside test, but still not abandoning the downside pullback to 122.80. Gold was weaker overnight and still awaits that confirmation, which is the engulfing candle at 1,942. A break there gives further scope towards 1,928 to 33, which is a key level. As a break there would give further scope down towards 1,850, where I feel is where we are heading due to the fact that the primary is still negative and also seeing an engulfing candle on a monthly outlook from that peak or rejection from 2060 does put the negative sentiment slightly stronger in play. Wrapping up with all, the market was slightly firmer overnight and still keeping its focus on the trajectory topside of $74 a barrel. I feel reassessing from there could see a break up towards 76. Any pullback still likely to be limited with $71.80 holding as a short-term support. Well, that's a wrap for the day. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the continuing day.